Well, the new year brought new changes to how those of you who gamble will have to handle your taxes. 10 Tampa Bay News reporter Miranda Parnell spoke to a sports gambling expert about how the changes could impact your bank account.
When your money's on the table, the goal is always to win. But sports betting and gambling attorney Daniel Wallach believes new changes hitting the industry will be a lose-lose.
There's no winners here.
Starting this year, Americans filing their taxes will now only be able to deduct 90% of their gambling losses as opposed to the previous 100%. Simply put, if you won 10 grand but also lost 10 grand gambling this year, before you would have technically broken even, but not with this new 10% change.
So you could break even as a gambler and still owe money to the federal government. Prior to 2026, you could deduct all of your gambling losses and apply it against your winnings.
Hunter Whittle has been sports betting for about 3 years and says he doesn't think a lot of bettors will understand the changes.
Whenever you win, you just think you got free money, of course. So now at this point, people are going to actually have to think about it and track it and know how much to pay in taxes.
Wallach says the changes may push professional bettors to find other ways to avoid paying up.
Instead of betting with the Hard Rock app in Florida, maybe they go offshore. Maybe they go into the sports prediction markets. And if and when that happens, the state is going to lose taxable income.
As for Whittle, he's already speaking with his accountant on how to handle tax season this year, keeping the most important rule in mind as he does so.
The House is always going to win, so people have to remember that. It's either going to be the government, it's going to be the state of Florida, or it's going to be Hard Rock Bet.
In St. Pete, Miranda Parnell, 10 Tampa Bay News.
A Nevada lawmaker has filed a bill aiming to revert the gambling loss tax deduction back to 100%.